Property owners are being warned they might not get the returns they're looking for if they sell this year. Although Sydney prices are expected to rise over the coming months, experts warn that a profit can't be guaranteed. Here's Today Tonight's Pippa Gardner.
And we are selling.
What goes up must come down.
Sold, congratulations.
After the historic price highs of 2010, the Australian property market took another hit in 2012.
What we're seeing at the moment is a new normal.
If you're trying to be a so-called investor out of house prices, you're better off buying cans of Spam than you are buying a house.
Latest figures from property analyst firm RP Data show, on average, house prices across our capital cities fell 0.4% last year. Melbourne fared the worst, with prices down 2.9%. Brisbane and Adelaide were both down 0.8%. Hobart down 0.1%. Sydney bucked the trend, growing 1.5%. Perth prices climbed 0.8%.
We've never seen these situations before, and you'd really have to go back to the early 1990s to see similar housing market conditions to what we've seen over the last few years when we had our last recession.
RP Data senior research analyst Cameron Kusher crunched the numbers. He says the days of watching the price of your home increase year in, year out are over.
I don't think property values are going to grow as quickly over the next 10 or 15 years as they have over the last 10 or 15 years.
Consumer confidence is low. We're worried about our jobs, the economy. Not even interest rate cuts are enough to spur the market. According to economist Steve Keen, that's because, as a nation, we're mortgaged to the hilt.
We've reached a ceiling and households are now bouncing along at a level of debt that is 5 times the amount of debt they were carrying back in 1990.
Sydney remains the most expensive city to buy property. The average price for a 3 to 4 bedroom home is $656,000, up from $648,000 in 2010. But to find a family home at these prices, you'll have to go at least 20 kilometres out of the city to suburbs like Lidcombe, Caringbah and Mount Colah. In Melbourne, the average home costs $528,000, down almost $30,000 on 2010 median prices. And again, it's suburbs at least 20 k's out of the city, like Clayton, Rowville and Mulgrave. Brisbane's median house price is $430,000. That's dropped $30,000 since 2010. But you only have to go 10 kilometres out of the city to suburbs like Everton Park. Adelaide's median house price is almost on par with Brisbane, $429,000. It's dropped about 20 grand since 2010, but you can live about 8 k's out of the city. Hobart is the most affordable, with the average home costing $325,000. That's down $12,000 since 2010. You can find homes for this price 7 kilometres from the CBD. And in Perth, the median house price is $553,000, the same as it was in 2010. And for that, you can live 8 k's from the city. Home ownership might be the great Australian dream, but when you do the sums, there are fewer than 500 suburbs across the country where it's cheaper to buy than rent. Experts say what people should learn from the downturn is that owning property doesn't necessarily guarantee returns.
Hold off. The longer you wait, the more of a deposit you're going to put together anyway, and the more prices are likely to come down. In a falling market, the best thing you can do is wait.
People have got time to sit on their hands and potentially get those properties cheaper in 6 to 12 months' time if they wait it out.
But not, it appears, if you're in Sydney. High rents and high competition for rental properties continue to drive demand from buyers.
Well, Sydney is somewhat the New York of Australia. It seems to be the strongest market, and in times of recovery like I think we're in right now, Sydney tends to outperform most of Australia.
John McGrath, CEO of McGrath Estate Agents, says we're at the tail end of the toughest economic period we've seen for 100 years. He believes 2013 will be a stronger market with mild price growth across the country.
I think real estate should always be seen as a long-term investment, at least 3 to 5 year window. And I think right now we're moving into a strong 3 to 5 year growth period. So from that perspective, I think investing in real estate now is really good timing.
Senior economist at Australian Property Monitors, Andrew Wilson, is also forecasting a slow recovery this year.
If the economy improves, then I think it'll be a good time to buy early on in 2013. But generally, depending on what section of the market you're interested in, but a lot will depend on where the economy goes.
John McGrath says if you're looking to sell, you might want to hold your property. But if you have to sell, you will get a better result than you would have this time last year. As to where to buy, John says Southeast Queensland was hit hard because of a downturn in tourism and the strong Aussie dollar, but is likely to have the biggest recovery and returns. Also, aim for CBD markets.
Try and stick, if you're an investor, to the big CBD markets close to the coast, and the beaches and the waterways seems to be where most of the growth has been over the last few years, and I expect that's where it will be over the next few years. So inner city, coastal, in the big cities around Australia should be the safest property play.